again, you have to have that balance of having the most deliveries and or the better profit margins. And that's really why we have seen a huge premium when it comes to Teslas, because they're able to profit a lot more when it comes to their cars at 18%, 19% here, if you're looking at the United States, rather than maybe some other EV players or hybrid players that are out there that are only making around 5% or maybe 6% margins when it comes to the car. So obviously they need to sell more in order to be a little bit more profitable. So it's kind of a double-edged sword, but Tesla's definitely taking it in stride and continuing to ramp up their production in China. And hopefully we start seeing a little bit of an end to this price war, a little bit more price stability here, and that's going to provide investors a little bit more ease or calmness when it comes to the future outlook for Tesla here in the near term. In the long term, investors that invest in Tesla are really bullish on this name, and I continue to talk to them on a day-by-day basis.
Over the past few years, Tesla has not only disrupted the electric vehicle market, but it's also made a significant impact on traditional automakers. From affordable models to more premium electric vehicles, Tesla's pricing has been strategic and innovative. Price optimization benefits automotive companies more than any other industry. However, it is frequently an extremely difficult task. The truth is, only about 10% of consumer brands have a successful and high-growing pricing strategy. And Tesla belongs to this small proportion of automotive companies. And this is what the automaker has to stand out above the rest when it comes to the EV market. In this video, we're going to explore Tesla's approach to pricing and how it's changing the game and affecting its competitors, and how it's also influencing the entire automotive landscape. With that said, let's get started.
Speaking of travel, let's check in on some of the EV makers. Tesla shares riding higher today after data from the Chinese Passenger Car Association showed that Tesla sold over 84,000 EVs throughout China in August. That marks a 9.3% increase from a year ago. Sales of Tesla's China-made Model 3 and Model Y cars rose over 30% from a month earlier. So, this is good news for Tesla, especially considering how much competition is in China that's leading to the pricing wars that we're seeing across the sector. Last week, we saw Tesla once again cut their prices for its Model S and Model X in both the US and China. We'll see how that impacts demand and margins moving forward. But so far, it seems to be so good.
Yeah, and I think the sentiment here, at least more broadly speaking from the street, has been that they're willing to sacrifice some of the pressure that we're seeing on margins, at least in the short term, in order to kind of gain that sale picture, expand the market base, or really, I guess, in this instance, defend their market share, because we know that's such a critical issue here for Tesla, not only in China, but also obviously what's going on here in the U.S. But when you take a look at these sales numbers across the board that we've seen over the last couple of days, Li Auto, a huge competitor to Tesla, the domestic competitor there in China, they delivered nearly 35,000 cars in August, up 663%.
Tesla's business model is adaptable and scalable. The EV maker is constantly innovating and launching new products and services, such as the Robotaxi, the Semi, the Roadster, the Powerwall, and the Solar Roof, as well as the legendary Robotaxi. It is also doing this while expanding its production capacity and global presence by building new factories in places like Texas and Germany. Tesla is also growing its market shares in China, which is the largest and fastest growing electric vehicle market in the world. Hey guys, welcome back to Tesla Tomorrow. The thing is, Tesla's price declines are consistent with the EV automaker's long-term strategy. In its early years, Tesla concentrated on making high-end cars at premium prices in order to demonstrate the viability of its technology. However, things are starting to change as Tesla now plans to make its vehicles accessible to a wider range of customers by introducing mass-market models at lower price points. With its production capacity increased, Tesla should be able to reap efficiencies of scale, making it more competitive against rivals. Before we continue, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla is a company that's revolutionized the automotive industry with its innovative products and services, as well as its business model, which is based on three main pillars: direct sales, servicing, and charging network. These three pillars give the company a competitive edge over its rivals and enable it to create value for its customers and shareholders. One important aspect of a business is its pricing strategy. since this has the potential to make or break a company's financial position. Based on our observations, Tesla, like other companies, analyzes market demand and customer behavior before deciding on prices. So definitely, the consequences of these rapid and recent price cuts have been evaluated by Tesla. Already, Tesla's direct sales model allows it to bypass the traditional dealership system and instead sell its cars directly to customers through its own showrooms and online platforms. This way, Tesla can control the quality and pricing of its products as well as the customer experience. Tesla's direct sales model also helps it to avoid conflicts of interest with its dealers, who may have incentives to promote other brands or discourage electric vehicle adoption. Things like this are what make people choose to buy Tesla. Beyond the present moment, Tesla is also planning to make cars suitable for the future. The automaker collects valuable data and feedback from its customers, which it can then use to improve its products and services. Currently, Tesla adopts a pricing model that is different from other automakers. It offers remote diagnostics and over-the-air software updates, which can reduce the need to physically visit a service center. Tesla's servicing model also enhances customer loyalty and satisfaction, as well as generating recurring revenue streams. Overall, Tesla cars are not only beautiful and fun to drive, but they're also safer and smarter than conventional cars. These vehicles have the highest safety ratings in their class, and are equipped with advanced features like autopilot and full self-driving, which all enhance convenience and comfort for the driver and its passengers. Although Tesla and its CEO Elon Musk are known for exaggerating timelines and flaunting confidence that Tesla's shares could soar 10 times its current price, Elon Musk isn't alone in recognizing the potential of the company's products. For instance, Tesla's Robotaxi fleet could revolutionize the finances and potentially catapult it to become one of the most valuable companies in the world. In an attempt to quantify just how impactful a Robotaxi business would be for Tesla, renowned investment firm ARK Invest, which has some of Tesla's biggest fans, recently released a report sometime in April, and this report highlighted findings from a Monte Carlo simulation. The results were grouped into a bearish scenario, an average scenario, and a bullish scenario, based on the outcomes. And ARK Invest hypothesized that successful implementation of robotaxis could generate anywhere between $200 billion in a bearish scenario to nearly $613 billion in the bullish scenario. Furthermore, it estimated that robotaxis could contribute more than 2/3 of the economy's future earnings before interest, taxes, depreciation, and amortization. Although, like any simulational model, ARK Invest analysis has got its own limitations. Even in a bear case scenario, in which Tesla robotaxis produce just $200 billion in annual revenue, that would be a massive contribution to Tesla's revenue and overall valuation. For a long time, Tesla has undisputed command of the electric vehicle market. As other automakers ramp up their EV production efforts, Tesla will now have to deal with a different industry environment. However, this doesn't mean that its competitive edge and advantages are going to disappear. In contrast, it will require investors to recognize that the best long-term corporate strategy for keeping would-be competitors at bay would be taking steps that hurt margins in the short run. As a Tesla investor, it's important to realize that Tesla's business model is a unique and successful one. This is because it combines major competitive strategies, such as direct sales, servicing, and charging networks, to create a customer value proposition, and this model is also aligned with its mission of promoting sustainable energy and transportation. Tesla's business model is flexible and scalable, and it can adapt to changing customer needs and preferences, as well as new opportunities and challenges. Therefore, we believe that Tesla's business strategies, like the recent price cuts, will stand the test of time and help it continue to dominate the electric vehicle industry. What do you think? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.